Good evening and welcome to Monday night on DJN TV. It's time to talk about our business loan situation, what's going on right now financially with the COVID. And we've got Jerry Bazata with us. Good evening, Jerry.
Hey, good evening, John. How are you?
I'm doing well. Thanks for coming back again. It's been a couple of weeks. We've had a lot of things change, and this is going to be a big week for a lot of small businesses when it comes to some of the disaster type financing that had been put together. So let's kind of dive right into it tonight. We're broadcasting for those of you who are watching us on Facebook or YouTube. If you've got any questions about any of the things that are going on, put those into the comment section. They should all propagate to my computer tonight so I can follow those. I see Joe's jumped in. James, thank you very much for being with us. Jerry, the PPP, the Payroll Protection Program, has been through a lot of things. So let's kind of jump into where that's at right now.
Yep. So let's kind of go through what happened. As of April 10th, self-employed individuals were able to kind of put their applications in. There was a lot of panic because at the time that opened up, shortly several days later, the funds ran out. Everybody was in a panic. It has since been opened up, and yes, there's still plenty of money available. For those of you that are self-employed, what the real basis is going to be is what your 2019 Schedule C looks like. So for the majority of us in the gig industry, we're all Schedule C employees. We're self-employed. We don't have a multitude of employees. So the way they're approving that is taking your Schedule C, whatever your net income is, divide that by 12 and multiply it by 2.5. They're not adding back depreciation or not adding back expenses. So that's what's qualifying you on that basis. So for many of us who are self-employed Schedule C, there is hope of you getting some money through the Payroll Protection Program. The banks are still accepting applications. There's still about $100 billion that's out there. There is money that's come back. And it's not only come back from, and I'll allude to the Ruth Chris situation, but a lot of businesses that got into the first round are now rethinking about whether or not they wanted to take the money. And in my particular case, I've had two clients that have actually returned the payroll protection money because number one, they didn't think they were going to bring employees back in time. And number two, because they didn't know really how they were going to spend it because a lot of their employees are collecting unemployment and don't want to come back.
So you say not bringing them back in time. So kind of go into that. What were the timelines for that so people will have an idea of what this is?
You have to spend the money within 8 weeks of when it's deposited to your account. So the clock really technically starts ticking when the money goes in. So if you receive the money today, and the bank put it in today, you have 8 weeks from today to spend that money. And again, to remind everybody, 75% of it needs to go to payroll costs. 25% can go towards expenses like utilities for your business, rent payments for your office space. You cannot include a home office, mortgage payments on a business condo or business location, the interest that's accumulated in that. So it's a 75-25% split. And that's how the forgiveness is going to work. Now, for a lot of you, once you hit the 8 weeks, the bank is going to turn around and require you to submit paperwork to them that they will then submit to the SBA. The SBA is ultimately the one that is going to make the determination whether or not this loan is forgivable. A lot of people are banking that the bank is going to give them the answer. We are not. It's the SBA. Another word of caution, within the PPP directives and the final interim approval through Congress is SBA has up to 6 months to make that determination. So not necessarily are you going to submit the paperwork to the bank and the next day me, your loan officer, or me, your banker is going to call up and go, yeah, it's all been forgiven. We're going to have to submit it to the SBA. SBA is going to review it. One more twist to this. SBA is not going to come out with the final directives on what is forgivable and how that's measured until May 15th. So this morning when I get in, Raymond James, who's one of the consultants there, sent out a note saying they are still getting together the final directives on exactly how it's going to work, whether it'll be you'll fill out a spreadsheet, which you're going to have to submit to the bank. We then in turn are going to submit it through the SBA system to get a verification from the SBA that, yes, it's been forgiven. The other thing to make everybody aware of is there is a 6-month deferment on this PPP program. So you're not paying interest on this money for 6 months. So while you kind of go through this forgiveness period, you are not paying interest. Once it's determined what is forgivable and what's not forgivable, you will then pay interest and pay back the portion that is not forgivable. A lot of people are saying, well, if it's not forgivable, why would I take it in the first place? Well, yes, some of it will be forgivable, but if you're looking for that working capital, this is a 1% interest loan payable over 2 years. The average I'm seeing for self-employed individuals is $18,000 to $20,000. When I look at the number of loans that we did in the Cambridge Trust, we had done over 800 loans. We kept track of the number of jobs that we rescued, which was 19,000 jobs that were recorded as being retained under the program. So when you start multiplying that by the banks across the country, that's a real significant number that has gone out there. So again, don't become disheartened. Don't become sort of concerned. Yes, they are going to look at the forgiveness program. They want to make sure they get it right so that truly they can account for everything that's related to your business.
So Jerry, when a person gets the distribution at 18,000 for the average that you're talking about, as a small self-employed person, do I need to then write a check out from my business account to myself and then put it into my personal account? Or how is that going to have that paper trail to be able to hand back to you at the bank and say, hey, here's the proof of it?
They haven't given us a specific directive on that, John, but from a banker's perspective, from my perspective, I would certainly do that. I think you've illustrated it perfectly. They're going to be looking for records that you use this to help support yourself. And as a sole proprietor, what are things that you need? You need to pay for your own personal expenses. So writing a check from the business to you and indicating its pay or its coverage for non-gigs. One DJ I was talking to over the weekend, think about it this way. If you would have had 2 gigs this month that would have earned you $6,000 in income, maybe you write yourself a check for this 2 weeks to say this is deferred, or these were gigs that were canceled. These were, I would have been paid $500 for doing 3 trivia nights. So you know what? Those canceled. I'm going to write myself a check for $1,500, which would have been what I would have been paid for those trivia nights. So again, evidence that you use to support yourself is probably the first step. I would document everything that you do. A lot of people took this money and put it in a separate account and then are creating spreadsheets and copies of canceled checks as to how they really spent the money.
So they can really hand that to their banker as proof of how it's going to work.
Right. What you don't want to do is get $18,000 and then say to the banker, well, I had to go out and buy a whole new speaker system and 2 new controllers, and I'd like to get it forgiven because I'm going to need it for future events. That's not going to happen.
So we do all of our paperwork and such, and we have all of that done. But what happens during this time frame? We take our line 31 from the Schedule C. That's the number divided by 12. That's what they give us. And we add all that. But what happens if we're starting to make some income via maybe our online trivia, as an example? How does that figure into this, or could that potentially cause some problems?
I don't know if that's going to cause any problems because, again, it's the spirit of the law was to keep people employed when you had when you didn't have income coming in. We know businesses that did take the money that also had income coming in, but again, it's a reduced amount. So I think you have to kind of look at the spirit of the law. Are we getting some income in from doing digital or online or drive-in trivia? Yeah, but does it really replace what we would have made totally from corporate events, from what we made at weddings? Again, we're in this prime period where this was a big wedding month season, May going into June. So really, if we look at those that got the money, and we ended up doing all our distributions to the bank, to the payroll program in the second round by Thursday. So most of these people now have the entire month of May, the entire month of June. That runs your 8 weeks almost through 4th of July, where they can spend this money to support themselves, their payroll costs. So I think, John, yes, some of us are going to see some gig money coming in, but not to the extent that we would have had it with all the weddings. And I think the majority of the DJs out there have had weddings cancel for May, June, July, and August. So, again, when would you have realized that? If somebody had to pay you 30 days in advance, you would have realized that income 30 days prior to the event. So if you had a gig coming out, say, the middle of July, and you would have expected that payment in the month of June and realized and booked it in June, you can use it towards it. So,
Jerry, on Facebook, for some reason tonight, I'm not seeing your name, so I apologize. I'm not going to be able to refer to you by name on Facebook. But we had somebody asking about exactly this. Everything we're talking about right now is for self-employed persons. This is not for staff. What we've talked about so far is the system for being self-employed. So somebody was asking about if this is possible. The PPP is available for self-employed. So everything we've talked about so far.
right.
And if you need to, rewind it because we don't want to. We don't want to rehash it.
And for those that are there, again, the PPP program was both self-employed and those people that have W-2 wage people. The only thing that didn't count and what you could not include in both the self-employed version and the original W-2 employees was anybody that was a 1099. Because if you're a 1099 or a subcontractor, you were allowed to apply for yourself under the self-employed rule. So there were DJs that did reach out to me and event planners, wedding planners, that their staff are all 1099 and they were trying to pay them to keep them on. You cannot do that. All those 1099 people had to apply themselves. They would consider it to be double dipping.
Another one here from Facebook. Again, thank you guys for the questions. Please put those into the comments and they should get to me. The user makes comment that in the past 12 months, i.e. 2019, if they did not pay themselves, this really wouldn't work for them. It's really not if you actually cut yourself a check or not. It's all based on that line 31 on the Schedule C. If there's any money there, that divided by 12 times 2.5 is your loan amount.
Yep. And that's correct. I mean, you wouldn't expect anybody who is a Schedule C employee to cut themselves a payroll check, unless that's what your accountant told you to do. And there are Schedule C employees that do cut themselves a check and show it as wages on a Schedule C, because what they're trying to do is, don't forget, you cut yourself a check, you deduct federal, and you're trying to establish a baseline for Social Security. If you're constantly self-employed and you're basing it off of net income, you're never really contributing to Social Security. So.
Excellent. Again, if you got some questions, get those in here. Okay, so a person gets the money, you've dealt with the money. At the end of the 8 weeks, I need to get a report to you at the bank and says, hey, this is what we did with the money. It was gone to payroll here, and it covered some this, that, and the other thing. I get you that information so you can have a track of that $18,000.
Correct.
Then and for 6 months, I basically have to sit there wondering if I owe this money back or not.
We're hoping, and the banking industry overall is looking at programs and software that can give us a good indication as to whether or not, again, your bankers are not going to play blind and dumb. We'll have a good inclination. We'll have a good understanding of the rules once SBA gets us the final, what they call SOP, standard operating procedures. We'll then be able to coach our clients to the best of our ability. But ultimately, that final decision as to forgiveness is going to rest with the SBA. It's not going to rest with the banking industry. So
if I did get a PPP loan, and I'm to that point where I'm thinking I'm not going to be able to spend it on staffing as a smaller business with multiple employees because they're making more money somewhere else right now.
Yep.
If I want to give that money back, what kind of costs or expenses am I going to accrue by just basically getting it and then handing it right back to you soon?
There's no cost. The government actually extended the rescission period until May 14th. So between now and Friday, if you ultimately decide that, you know what, I got this loan, it's not going to work for me, I don't want to have a loan, I know none of it's going to be forgiven, you simply contact the bank, you tell them where the money is sitting, they will withdraw it from the account and they will go into the SBA system and they will cancel the loan. There's no fees, there's no nothing. So you have from now until Friday if you've received the money and you're concerned about the fact that this may not be forgiven, I'm not bringing employees back, or I don't know, I'm nervous about it.
Right.
You contact the bank and they will take it back. I've had two of my clients decide to do that, and it happened within a matter of an hour, and we canceled the loan.
Okay. So
So
there wasn't even
it,
money.
it works fairly quickly. Yeah.
So now let's go the other direction. They've taken the money. It was an easy number, $10,000. They sent the paperwork in, but maybe they didn't use it enough for payroll. Is it possible that maybe like 5,000 of it could be forgiven and they're having a loan on the other 5, or how does that work?
Yeah, there will be, and from what we're reading and from what's being fed to us is all of it may not be forgiven, but you will, whatever you don't have, you have the option of paying back. Now, let's walk through a couple of scenarios.
Mm-hmm.
Let's say that you get $20,000. You use 10 of it towards payroll and you can't justify the remaining 10,000. SBA comes back and says 10,000 is forgivable. You can then turn around and just pay back the $10,000, because there is a period of 6 months where the SBA is not charging interest on that, and that's through them determining the forgiveness period. So you can go to the bank and say, look, at 10,000 was forgivable. I don't want the other 10,000. I'm going to pay the loan off in full. And then the bank will work through. Unfortunately, we don't have the details because we're still trying to work through that once we get the SBA SOP on May 15th. But again, in theory, you will be able to give that back. Now, the other flip side of it is, hey, I know I'm going to be in tough times comes the latter part of the year. Rather than me going to the bank and asking them for a $10,000 line of credit or maxing out my credit cards, you know what? I'll use this. I'll take this remaining $10,000. I'll use it as part of payroll beyond the forgiveness period, and some of the expenses, mortgage interest or whatever, and I'm just going to pay it back over 2 years at a 1% interest rate.
Oh, we've got some really good things coming up here. So again, that area, the 1% interest, is that for the life of the repayment of the loan?
Yeah, the repayment period is 2 years, so that'll be 1% for 2 years.
Okay, excellent. So after, okay, so David is asking, again, thank you guys for the questions. We've got some really good ones here for you, Jerry.
Go ahead.
So if they take the PPP loan and then after the 8 weeks is done and they've filed the paperwork to get the loan forgiven, if business hasn't started up, can they then go file for unemployment as a self-employed person? Any idea on that one?
No idea on that. You're going to have to check with your individual states. That again is going to be what's available, what the states are taking, and I think it's all kind of fluid as to how much we return back to work. But if you've exhausted your payroll protection loan and you have no other source of income, and the state is still offering unemployment on the basis of self-employment, I would actually file at that point. Now, here's the other point too, and I'm not an expert in this, but what I've been reading is, and what I've been hearing from self-employed individuals is, you can go ahead and file for unemployment. It's just you're going to declare what you're getting in the PPP, so they get qualified for it. But in the weekly claim, they're saying, yes, I got it. So, okay, you won't be paid this week. You won't be. So some people are doing it simultaneously, knowing that the PPP will last them for maybe 6 weeks. And then because they're qualified on week 7, they now start collecting the unemployment. So the difference is, if you've got the PPP, you have to exhaust those funds first before unemployment will kick in. But again, I would ask you to call your individual states. And I know it's tough trying to get through to these people, but I would clarify each rule. And a lot of times you can go out to the individual unemployment websites and be able to see that directly. So, John.
Sure. Good advice or good thoughts there. Okay, so one person's asking about the 75% thing when it comes to the PPP. Kind of break that percentage down again, and then there's a follow-up question. So what is that 75%?
Okay. If you get $10,000, $7,500 has to go towards payroll expenses. The remaining $2,500 can go towards interest that you paid on your business office mortgage, rent for your business office, utilities for your business office. All right. Under the payroll expense, it would include your health insurance, life insurance, contributions to 401k plans, retirement plans, benefit plans. That's what gets included in that chunk of that 7,500.
Okay, so when they do that and do that properly, then all 100% of that 10,000 is potentially forgivable, most likely.
Correct. And again, you don't have to use it for rent. If you, and I've had companies that have just put in for payroll, although they could have qualified for a higher amount, they actually took less because they didn't know they were getting forbearance agreements on their mortgages, or they didn't have that office space that they could cover. So they just put in less of what they qualified for. So again, the one thing you want to keep in mind is those expenses outside of payroll cannot exceed 25% of the total forgiveness dollar. And that was a change that SBA put in place after the first round started to come out. And that change went into effect April 2nd. So they really were making sure that people were not using the money to support fixed costs and not putting it towards payroll expenses.
Excellent. Jerry, somebody's talking about, and this, forgive me, this makes, what's it, PUA?
That's the additional $600 that the government is giving on top of the unemployment.
Okay.
So that's the pandemic unemployment assistance.
Okay.
That's what that is. So that's the additional $600 on top of what you would be getting from your local state unemployment.
Okay, because they were saying that they're paying their staff. They filed for the PPP to pay their staff, and then they themselves were doing the unemployment with the sixth thing. And of course, again, as we just talked about, as long as you're using the 75% for staffing, the 25% for these other approved areas, you should be good with
Correct.
That. Somebody had asked about the where was it? The EIDL.
EIDL?
Yeah, let's touch base on that, because that has made a change here from the first round to the second round.
Yeah, the original round was you were allowed to apply up to $10,000, and then with the massive amount that came in, they adjusted it that it is basically $1,000 per employee up to a maximum of $10,000. People are getting that in their account. It is forgivable up to $10,000. There's been some restrictions on the cap amount. What I understand in the last directive that came out, there's close to 1 million applications that are still in process with the SBA.
And now we looked at it last Friday, Thursday, Friday, because in the state of Minnesota, it hasn't been up on the website. All of a sudden it appeared. And in Minnesota, it says that it's only for agricultural businesses now.
Yeah, that's the other change that just came about, is they're restricting it. So if you are a DJ and you have not applied for the EIDL, unless you're a DJ and a farmer at the same time, not going to happen.
Not going to get
it.
Yeah,
it's not going to happen, because every single business out there has been applying for this loan. And so what they're kind of doing is restricting the volume now, because again, that's another program that's going to probably run out of money before anything else does.
Jonathan's got a absolutely fabulous question. Jonathan's question is, if someone has a full-time job and is still working, and they have all their DJ income was lost, could they file for a PPP with the DJ income that was lost?
Yeah, again, the PPP is for self-employed individuals. Yeah, if you're a self-employed company and you lost that income, you can apply for it. Now, remember, you're going to have to pay yourself for that, but I don't see any restrictions, nor have I read any restrictions that say, no, you can't apply for the program.
Excellent. And I think the difference really is between that and unemployment is, obviously, if you have a full-time job, you would not qualify for unemployment. So
that makes a lot of sense. You're not going to be able to double dip. Yeah. But certainly you can put in for the PPP program, because again, it's another source of income. It was to support your family. You record it on your tax returns. So I would pull the Schedule C and see what you qualify for.
Okay, so we got a couple of questions. We're going to be hitting a couple of things, because we've got folks that are probably bouncing in and out, and I want to make sure we hit these, Jerry, because we just talked about this a little bit ago. But after the 75% with payroll, if you don't use that last 25% for approved areas, so let's say, I think it was a mortgage the mortgage interest on the office.
Yep.
if I needed to use it to pay the mortgage of the office, that I don't think is.
Well, it's again, you can deduct the interest portion. So look at your mortgage payment. If you are paying a $2,000 mortgage payment, 1,000 goes towards principal, 1,000 goes towards interest. You can use the $1,000 in interest towards the PPP program. It's the interest portion. So it doesn't necessarily just mean that you're paying interest only on your mortgage. It's the interest portion of your mortgage, the interest portion of all business loans that gets applied to that, and the utilities that are associated with that business office. So let me take it a step further, John. Again, you have a $2,000 mortgage on your business condo where your DJ or your photography business is. Your monthly payment's $2,000. 1,000 is interest, 1,000 is principal. That 1,000 is written off. You have a loan on a truck for the DJ business or panel truck for all your equipment. Your loan is $500 a month. 300 is principal, 200 is interest. That 200 can be used towards that 25%. The light bill for it, your heat bill, your air conditioning, whatever. If that's another $100, so for during that 8-week period or 2 months that you're going to have, you can write off, $1,500 will be used towards that 25%.
Now, we were talking 75-25, but that doesn't mean you have to use 75% for payroll. You could use 80% or 90% for payroll, correct?
It's 100% towards payroll.
There we go. So
if everybody remembers, when you filled out the application, just below where you listed the business, there were 4 little boxes, and the boxes said payroll, utilities, rent payment, lease payments. As you check those boxes, the bank was under now the impression that you were going to use this PPP for all of those expenses. So they're going to look for the qualification in that. If you didn't check the boxes, it's not going to be a major issue. Don't panic, because I can see the Facebook page lighting up like, I didn't check those boxes. Oh my God! No. Again, it was the intent. The tough part was the qualification was only based on payroll. It did not ask you to add all of those other pieces in.
Exactly. And that for some of us who have a lot of depreciation, we get to that line 31, and that could be nickels and dimes comparatively.
There is, and I will share it for those of you who are really concerned and want to sort of see where you would fall in terms of the forgiveness. There is an accounting firm that sent to me 2 weeks ago a spreadsheet they kind of created from what they know right now. And I'm more than happy to send it out to anybody. Just email me at jerry@maindiscjockey.com and I will forward it to you. It's an Excel spreadsheet. It has the formulas put in. Again, it very clearly says it's subject to the final directive by the SBA, but it kind of gives you all the categories that you can use for consideration for the forgiveness portion.
Excellent.
Yeah.
Forgivable. Great. There we go. So again, get back. You've got single ops. Yes. If you're a single op and such, again, it's all about that line. Okay. How about, and I know this, sometimes DJs, we don't do our paperwork right. If they don't file a Schedule C, they're hosed.
If you don't, again, the government's going after what you do. John, let's talk about this. As a banker, if you have 2 sets of books, one for the IRS and one for yourself, I got to look at the IRS book. Unfortunately, the PP program says we have to look at the IRS books. So, I truly, none of us want to pay taxes. And here's the battle that I have every day. I want to see as much cash as you're making in the business as a commercial lender. What does your accountant want? Your accountant wants to reduce your tax liability as much as possible. Unfortunately, because this program came out so fast and so furious, and we were working for those of you who don't know, I started working on the payroll protection program for the bank I work for in the middle of March when when this was going. I've worked 7 days a week. Friday was the first day that I was able to walk away from this and just take a breather. But it's taxing and as tough as it was for all of you, it was even tougher for us to look at people's financial information and try to help them figure out what was there. It was probably something it definitely was something I've never experienced in my banking career in my life.
Yeah.
And I've done it for 30 plus years and lent hundreds of millions of dollars. And it was confusing. It was tough. And for those of you who battled your way through it, my 2 cents, and this is Jerry Bazata opinion. So if you had the word opinion, put it right below John.
There's a disclaimer here.
Disclaimer, yeah. I think the IRS and the government is going to not make this difficult. And I think this is why it's taking them some time to come out with the directives on the forgiveness, because everybody's worked so hard to get this money out to the business community. Bankers have worked long, long hours. Easter Sunday, I was spending 4 hours in front of the computer trying to qualify some of my own clients. And I think we just don't want this to be sort of oh, well, this is not what we intended. And I'm hoping that's what the government is looking at. Had a chance to be on a call with Senator Collins. And again, her being one of the architects of this, wants it to be successful for businesses, wants it to be there so that you walk away with a good feeling that we helped you survive and that all of us will be able to pick up where we left off, be the latter part of 2020. Realistically, from the financial perspective, I think it's going to be tough through the fall as we try to deal with this social distancing, with sizes of groups. But I'm seeing a lot of positive signs for 2021. So,
more questions. When it comes to payroll, if my tax number, they were saying they throw out a $50,000 number. If it's $50,000, let's just round it to $52,000 to make it a little easier for us.
Okay.
So that basically is $1,000 payroll a week. If they get their numbers, do they have to pay themselves in essence that $1,000 a week if it's self-employed, or could they pay themselves $1,500 a week to make sure that they utilize that extra 2.5 or that additional money?
I'm going to answer it this way here. Don't overthink it. Okay. Again, you want to show that you use the money to support your lifestyle, to support your family, to support your business. I don't think they're going to argue or try to get explanations as to whether it was 1,000. So what I'm going to ask everybody to is don't overthink this. I don't think the SBA wants us to overthink it. And the bankers themselves, as we start dealing with the onslaught of these forgiveness requests, we're not going to want to think it either. We're going to want to get it in and out and back in your hands as quickly as possible. So we're going to want to not overthink this. We're going to review it, follow the guidelines of the SBA, get it in SBA's hands so they can make a decision and get back to you. So I think, again, the best part I can tell you is if you got $50,000 and that's what you were awarded based on 2.5 times your payroll expenses for the year or your self-employment, that's 2.5 months. That's 8 weeks worth of payroll. So, again, if that's what you would have gotten in a normal situation, then spend it as you would have gotten it normally.
Rent. If you're renting a building or renting an office, does that qualify for that 2.5?
Yes, lease. Yep, your rent and lease payments. So here's the interesting thing is as people were going through this payroll protection, a lot of people started running to, well, I'm going to ask my landlord, I'm going to tell him I can't pay the rent. And then all of a sudden they started scratching their heads going, okay, but I got the payroll protection and I can use 25 of this per rent, but I just told my landlord I want a forgiveness. And now they're rushing back to the landlords going, hold on.
Wait a second here.
I want to pay you the rent.
Nice.
So again, you have to think about this. It was to keep the money flowing in the economy. So you can't have both sides of the coin. You can't go to the bank and get the payroll protection money, want to use 25% of it towards supporting the fixed costs of your business, but then turn to the bank and say, can I get a forgiveness on my mortgage for 2 months? And I literally had a business that was thinking about giving part of the money back and it was a dental practice. They got a good sized money to bring back their hygienists and get ready to open, which they are this week under limited practices. Mm-hmm. But she started scratching her head and said, Jerry, I have a 504 loan. And she said, so the SBA's paying my half of my 504 for 6 months. And then I asked the bank that for a deferment for 3 months. She says, and then I got this payroll protection. And she goes, guess what? Cancel the deferment because I want to use the money for the payroll protection, or it's going to end up being a loan to me, another loan that I don't want on the books.
Okay, so if you have a home office, ooh, this is a good one. I know we're going to get a little more difficult, so this might get
Yeah.
to. If I've got a home office and I pay rent on my home, is part of that rent possible to be? Do you think that would be? Or are we overthinking it again?
I think we were told if you had a home office, it did not qualify.
Okay.
I don't know whether or not the evidence of rent payments. I would tell you submit it and see what the SBA says on it. See what the ruling is. The worst that can happen is they can come back and say, no, we're not going to qualify it. Anything you're unsure of, submit it. That's what I would tell everybody to do. Don't try to make the determination yourself. If you're on the fence, submit it and see whether the SBA will accept it or not.
Jerry, they're keeping you busy here tonight. The 25%, could it go towards business leases like a lease on a truck or a lease on a business vehicle, or if there was some gear that you were leasing?
That they did not clearly qualify.
Okay.
Again, I would submit it and see what they say. Again, if you're looking for the basis of where is it? They said interest on loans, mortgages, and rent for that and utilities. Again, once we get the clarification, and we'll let all the viewers know that once we get the final directives on Friday, I'll come back again next Monday, John, or next Tuesday, and I'll be able to give everybody a much more clearer indication.
Sounds excellent.
Let's table that one, and we'll use that as a follow-up.
Okay, great questions, by the way. Thank you, everyone, for the questions tonight. We still have more. What are your thoughts with the storage facility, rent on a storage facility?
It's not your office. It's a storage facility. Unless you can send a picture to the bank of you sitting in that storage unit with an office and a phone and a computer, go for it.
Probably not. Okay.
Yeah, probably not.
Let's see. What about if you own the building and you've been paying yourself a rent on that building as the business for quite a period of time?
Okay, so let's step back. Do you own the building and do you have a mortgage on the building, or do you own the building free and clear? What you're doing tax-wise, liability-wise. So if you have the business set up that you have an LLC for the building, a limited liability company that owns just the real estate in that building, and then you have your DJ business. Your DJ business is paying rent to the LLC so you can pay your mortgage payment. That's an affiliate. So when you filled out the SBA PPP program, you had to list affiliates to your business. So let me step back. Is if you apply for the PPP under it, I applied to DJ Jazz Music and Entertainment. That's my operating company. Mm-hmm. I have an office space, and that's under Jerry Bazata LLC. Okay, both companies are owned by me. I own and control both companies. When I filled out the PPP application, I would have filled that out under DJ Jazz Music and Entertainment. That's where my payroll costs are. That's where everything flows through. My affiliate that I would have listed under Schedule A of the application would have been Jerry Bazata LLC. All right. So in that particular case, what I would do is I would have had rent payment to the affiliate and the mortgage going through. You're not going to be able to claim both the mortgage interest and the rent. You're going to have to claim the rent under the operating company that filed the payment. Now, If you have checks and you've written those checks on a monthly basis, that's going to be your backup. If at the end of the year, the accountant just kind of makes a book entry and says, okay, I'm going to shovel this through just because you had the LLC as a passive company or non-passive company, that may be a little difficult to kind of walk through. So in this particular case, if you can show rent from the operating company to the LLC, then it should be forgivable. But if you tie it all together and you say, you know what, I'm going to just take the interest expense off of the LLC as an affiliate, that may be another qualifying, but you can't do both. You can't do the rent from the operating company and the interest from the affiliate LLC.
Excellent. Okay, we've had that question pop up a couple of times here, 3-4 times of the renting thing. So thank you guys for the questions. Excellent. Okay, so we talked about this earlier, but we'll hit it again. My loan seems a bit too big. I'm likely only to use half of it. Is there a way they can return, say, about 40% of it? Kind of go through that process for us one more time, Jerry, please.
Yep, I'll go back through the process again. Right now through the 14th, okay, you either have to give the whole loan back, all right, or you have to wait until we get into the forgiveness period and then you can return a portion of it. So it's either all or nothing right now until May 14th. If after May 14th, you go through the forgiveness, if they turn around and they say, okay, 60% of the money that you applied for is forgivable, 40% is not, you then have the option of paying that 40% back or keeping the money and then paying it back over 2 years.
So that 40% in that particular scenario, would you still then owe an interest on that 40%, or would it be?
It's 1% interest.
So
yeah. Right now, I mean, let's talk about it. If you were to go out and get a commercial mortgage, you're looking at a rate of 4.75%. If you were going to get a line of credit through a traditional bank right now, you're looking at probably prime plus 3, prime plus 4. So where prime rate is, you're talking a 7 or 8% loan. If you get a credit card loan, you're talking 18%. If you got 0% financing through IDJ now on equipment and you went through that period, you're probably talking 22%. So again, everybody, look, it's a 1% loan, 1% on $100,000. Okay, is $1,000. Okay, let's put it into context here. I don't know of any time I've ever done a 1% loan in my life.
And I hear you've been doing it for a couple of years.
I've done plenty of other interest rates, but I've never done a 1% loan. I mean, I don't know of people other than cars that do 1% loans.
Yeah, those occasionally you hear about it. In the payroll for employees, part-time employees, doesn't matter if they're part-time or full-time.
Do you pay them? They're employees, okay? We don't care. You listed what your FTE is. Oh, that's another thing, John, and this question's come up quite a bit, is part of the application was you had to list what your full-time equivalents were. And I was surprised at how many people didn't know what an FTE was, but it's full-time equivalents. So you have 2 part-timers, they equal 1 full-time equivalent.
Okay.
If you said you had 7 employees, do you have to have those same 7 employees when you filled out the application? No. Okay. You have to have 7 employees. So part of the other forgiveness is if you have employees, part of the forgiveness is, do you still have those same number of employees employed? And you're going to have to present the payroll records. Now, the payroll records that were presented were not based upon giving out names unless you gave us individual reports. But a lot of people that use payroll services, they created reports that were customized specifically for the Payroll Protection Program. ADP, for example. So those people that have ADP at the end of the forgiveness period are going to get a report from ADP, and ADP is going to say, look, on the weekly payroll, they told you they had 4 employees. Well, guess what? They still do have 4 employees. Now, the flip side, John, is if you reduced your head count, full-time equivalents, and you went from 4 to 3, the forgiveness that you're going to get, even though maybe you gave those other 3 people a raise, magically gave them a raise because you wanted to use all that money, that 4th employee that you did not pay is going to be deducted from the forgiveness. So if you reduce the number of full-time equivalents or head count between when you got the money and when it ended, because the basis behind this program was to retain jobs. So if you let people go or people quit and the head count you have is different than when you applied, that difference is not going to be forgivable, even though you use the money for payroll. So they're going to want to see that your head count remained the same.
Good information. Good information. I think we caught up with the questions, and our time is running out tonight here. I got to get ready for my next show. Thank you guys for the questions tonight, and thank you for being with us and watching. Jerry, one more time, if you had that little document, the email that they should reach out to.
It's Jerry at Maine, like the state Maine, disc jockey, DISCJOCKEY.com. So you certainly can find me, mainediscjockey.com. You guys can find me on Facebook. Certainly, send me a friend request, or even more importantly, those of you that are on LinkedIn, I'm pretty active on LinkedIn.
Nice.
More than happy to connect up with you on LinkedIn. I know John will have more follow-up. One of the things I think all of us should start to think about, and hopefully John, you and I will get into this more about what do we do going forward. And I think this is the biggest thing, is once we get through this and we start looking at it, from a banker's perspective, from someone who's been financing small businesses for many, many years, we've really got to start thinking about how we now manage ourselves going forward, and what are the lessons we've learned from all of this as business owners. And I think quite a few people who have never been through an economic downturn or a change, this has been a real eye-opening experience. And I hope in the coming months, John, I can share some light on this and help guys plan out so that this doesn't become up-nerving and upending, and really can pick up where they left off from. So.
Yeah, and we'll definitely be hitting that next week. Jerry, we'll check the schedules, gang, for Monday or Tuesday night, whichever works the best for Jerry, to come and give the update on the new operating procedures that they're going to be functioning under. That'll happen on Friday, so that'll be next week's show. And again, watch my Facebook page for the links and such to that show. Jerry, once again, thank you, my friend. I appreciate your information and your passion to help DJs in our industry.
Yep. Hey, John, just really 30-second quick funny. Got a phone call this morning from a good friend who was traveling from New Hampshire to the Midwest. Him and his wife stopped in Toledo, Ohio, stayed overnight. This morning he got up and he said to his wife, "Well, I got to look for coffee. So there's got to be a Dunkin' Donuts or Starbucks." And as they were driving through, they found a breakfast place that was open. And I understand Ohio started now opening up and allowing people to go into restaurants. And he said to me, "You know what?" He said, "It was basic diner type greasy dive." He said, "But it was going in there." He said, "I had the best bacon and eggs I've ever had in my life." So I think all of us are anxious to get back. All of us are anxious to get in there. But it was kind of funny. He called me from the road and just said, I don't care what it was. I don't care what the place was like, but it was great to actually sit in a restaurant. So I can't wait till we all get together again and be able to socialize in settings outside our home. So everyone be safe and be healthy.
That sounds great. Thank you, Jerry, once again. Thank you, guys. We'll be back at the top of the hour. We're going to be introducing an upcoming series of shows that we're going to be doing here on DJN TV, and we'll be talking about that here coming up at 9 o'clock. Thanks for watching.